For usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Wednesday. Let's take a look at some indicators that we can use to be sure that we're out of this doggone range. Most of this is obvious to most people, but let's just go through it. Let's see what we can find. One thing you'll notice about my analysis, I certainly prefer moving up the time frames, doubling the data capture. This will do better in periods like this where nothing's going on. It may catch breakouts slightly later. We'll take a look at that. And for alts, you may need to bump down a time frame, or you may need to reduce the data capture. Usually what I just do is if RSI, the setting is 14, I just double it. MACD, it's 1226, I just double it, 2452. Or you just go to a higher time frame. Use the weekly instead of the daily. Use the 2-day instead of the 8-hour. It's very subjective. You need to have a feel for that to know what you're doing. But over time, I think it's easy to establish what you're trying to look for. So we've got horizontal lines, volume, candlesticks, chart patterns, Bollinger Bands, Donchian Channels, which I don't think I've ever talked about, average true range, MACD, and RSI. ATR I don't have a specific chart for, but what we'd want to see is ATR breaking out, similar to OBV. Honestly, kind of the same concept. But let's go through a few of these. And if you can draw a horizontal line, you can trade any chart. Just like if you can dodge a wrench, you can dodge a ball. RIP rip torn. But it's very much true. Most of these indicators are all telling you the same thing. If we make a higher high and hold that higher high, that's a great change of character on the direction or the nonsense chop that we've been in for the past 6 months. Currently, for me, I'm already default bullish. Not always default bullish. If we didn't have liquidity injections, I wouldn't be as bullish. If we didn't have rates coming down globally, I wouldn't be as bullish. If we didn't have dollar weakness, I wouldn't be as bullish. But so far, we've got all of that. So to me, it makes more sense to be bullish at the highs rather than bearish at the highs. Downside support is basically the 200-week moving average. So if you are looking for a short, you're hoping that this range breaks. You're hoping that that horizontal line breaks below 54, and we reach for the 200-week moving average. The risk reward as a setup is better for higher rather than lower. That doesn't mean that'll happen, but that's another reason I like highs here eventually over lower lows. So we've got a series of levels. They're obvious. What's not obvious to the market is which one is important. Is the 65 level going to be important? Is the 70? Is the 72, 74? All-time high obviously should be important to the market. We're not there yet. We're not even back to the 70s yet. Every successive high has effectively been sold off. However, we did make a higher high. We did put in a higher high recently and close a higher high. Now we've lost that higher high, but that's the first step. Somebody threw a wrench and we didn't dodge it. Not yet. So can we make a higher low here? That would be the next thing to watch for on that chart. And this goes for anything, Solana, MSTR, ETH, any alts, any BTC pairs. Usually there's a pretty obvious range if we've done nothing for this amount of time. And usually there's a very obvious horizontal line at the very least that you can watch. Now, if we look at volume, this is volume on the daily of the index for BTC. Now you can look at various exchanges, derivative platforms. You can look at OI. You can do whatever you need to get a viewpoint here. The viewpoint for me is generally volume has been decreasing throughout this period of time, as has price. Whereas before March, price and volume was increasing. That's generally what you see across crypto markets, most markets. But on the daily, there's no clear delineation. You can add a moving average to the volume there. There's no clear delineation like where we want volume to be. It's been just as choppy and signalless as price has been. But if we go to the weekly with a moving average there, we can start to see what we want and what we should expect on a sustained move. If we compare this to last year, this time we had a breakout. Well, first we had a contraction of volume throughout the period in 2023. Then we had a breakout at those levels that led the way. Do we have any of that yet? We do not. We do have a contraction of volume, but we do not have volume that looks exciting here. We can look at the volume in 2020, similar picture. Here is COVID, huge volume, right? And then it comes all the way back down, consolidates, consolidates, consolidates. And we get a breakout on the weekly. And this might look subtle, but at least to me, it's more discernible than whatever this is. This is just garbled nonsense. But for me here, it's pretty clear we're going to need a weekly volume candle above the moving average. Could it be a fake out? Yes. Could it be meaningless? Of course. But we don't even have it yet, so we can't even say that this looks like a range breakout. And the general idea here is, okay, if we have a list of, I don't know, 4 things that we're looking for, maybe 8 max. Do we have any of those right now? Not really, but we're starting to maybe think about getting some of these things better than the others, dependent on the chart. I checked CME futures as well. The issue with using newer products versus the index on the spot side, or looking at specific individual exchanges, the volume tends to be all over the place. That isn't to say you can't use it, but in this specific instance, I don't think the CME volume is useful just because it's still sort of a newer product. And with the ETFs, there's hedging, and the volume profile just looks different on the weekly than it does on the spot side of things. And you could argue, hey, you know, with the ETFs, maybe we just won't see the volume we've seen historically on the spot side. But I would counter that with, well, the ETFs have to buy somewhere. They have to buy via APs, OTC, and they have to buy on exchanges. So eventually we're going to see that most likely on the exchange side of things. And then if we think about, is there any chart pattern here? We talked a lot about chart patterns. Everybody's talked a lot about chart patterns. Is there any candlestick patterns here? We've had a series of dragonfly, 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 dragonfly. Okay, those have been great. Have they gone anywhere in this range? They have not. This current candlestick on the weekly probably classified as a bearish engulfing candle. We've seen a few of those, one here, and not exactly one there, but also very wishy-washy. You know, we're not seeing candlestick patterns on the weekly that, to me, we'd want to see. You know, maybe you could argue some sort of 3 candlestick pattern here, but I don't think realistically that's super helpful. There's obviously the cup and handle, which many people have talked about. There's the descending broadening wedge, which many people have talked about. So it's maybe as important as this recent high breach looked, based on this, based on other horizontals, kind of irrelevant. You know, we're still doing the same thing we've been doing and really haven't been able to make a high either on horizontals that have been significant or this diagonal that's been in force since March. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. So we did have this kind of pseudo head and shoulders wedge thing breakdown that I really wasn't hoping would break down. I mentioned this, I think, on Monday or Sunday. We had a similar wedge thing. These are just awful to trade because it's a range expansion over time, and as soon as you're treating this as support or resistance, one will break over the other. But anyway, one other thing I wanted to mention today would be on the daily 50 moving average. We came down and tagged the daily 50 moving average, just as we did in October 2023. And then we had the bull cross. So holding the 50-day is a good sign. Coming back down to it is a good sign. And now we get to see what we're made of here. Do we get back above the 200? Can we get back above the 200? And then can we get the bullish cross? That's probably going to be late. But first things first, does this confirm at the 50 as support? And can it break above the 200? That'd be the biggest things to watch for. On the moving average front, you can add that to the list of things to watch. Bollinger Bands, of course, a fan favorite. These settings for crypto, generally perfect. But again, I'm on the weekly. This is weekly. This is using 20 as the setting. These contract in periods of low volatility, expand in periods of high volatility. The midpoint is used as a bias in the market. If sentiment is bullish, if sentiment is expecting a breakout, you generally see multiple weeks while bands are contracting with price above the midpoint. So we haven't even had that here, right? We're all over the place on the 20-week moving average. Post breakout, generally, we ride the bands, we hug the bands higher, push the bands higher, and hold well above the 20-week moving average. So that's one thing to watch for. Can we hold above the 20-week for multiple weeks or not? Thus far, we have not been able to do that. And can we break above the weekly, the top line there, Bollinger Band? Until then, you could easily just say, you know what, I don't want to do anything. I need the market to prove it to me. I need the market to show me that we are ready to get out of this range. And this draws it for you. You don't have to draw horizontal or diagonal, anything. You just wait. And it can be as subtle as it was in 2023, when for a year we were below the 20-week moving average, and then we closed above it, and then we closed above the top band. And that was all she wrote for 2023. So it's definitely a simple sanity check. Are we contracting or expanding on volatility? And what is sentiment? Is it bullish or bearish or neutral? Here it's definitely it's been all over the place. Leaning bearish, bands are expanding to the downside rather than the upside. But at the same time, we're also hugging the 20-week over and over and over. So we're not really making much progress one way or another. In the following weeks here, if Bbands continue to contract, which I don't think they will anytime super soon, just because we've had some expansion to the downside. But much like in 2020, post-COVID, you get some deep contraction and then expansion. So I would love to see 2 weeks, 3 weeks above the 20-week, going nowhere and just consolidating. We can also use the Bollinger Band width. I like to use this kind of like a volatility index and look historically at the white line down here. Historically, how tight have the Bollinger Bands been now compared to when they've expanded, when we've seen volatility in the markets? We are definitely at a historic low for volatility. We're lower than we were in 2020, about as low as we were in 2023 before the breakout this time last year, and similar to 2015 into 2017. The difference here obviously is that these colors signify closes above or below the 20-week moving average. Unsurprisingly, multiple closes below the 20-week, consecutive closes, when you're contracting on the Bollinger Bands, typically lead to downside expansion, bearish moves. So this doesn't really help us here in direction, but going forward, it's something to watch. Can we get, again, 2-3 weeks above the 20-week? And can we see maybe even some additional contraction in Bollinger Bands? Solana is similar. Solana, obviously not as much trading history, but volatility down here is contracted about as tight as it was in mid-2023. Bollinger Bands in Q4 2023 did give you a little bit of a heads up, a few closes above the 20-week, and then it was go time. And again, with Solana here, it's all over the place. It's back and forth. It's a coin flip, right? The Bollinger Bands aren't really helping you one way or another just yet on Solana. Looking at Donchian Channels, these give you highs and lows based on the period you select. So if it's the daily, it's going to be 20 days. If it's the weekly, it's going to be 20 weeks. That's the default. You can, of course, move these around. This is 20, this is 40, and this is 60. I, of course, like 40 or 60. But again, if you are trading alts or you're trading something that generally moves quicker and is more explosive, you probably want to use a lower number here or just the default. Really what I'm looking at as I'm just visually back testing, okay, last time we had a range that was similar. What did the entry look like? And was that entry correct? So in Q4 2023, 40 to me, you can see we're breaking out of these channels fairly early on. Cloud is very similar to this, right? But we're breaking out of those channels fairly early on and convincingly, and you're making higher highs here. So I like 40 or 60 for my settings. And you can see here, contrast that to now. These channels obviously are making lower high after lower high, lower low after lower low. And again, it's kind of just saying on the 60 setting here that despite breaking this recent high, it's kind of meaningless because price memory is still there using a higher time frame data capture. And what we want to see is this scoop-de-whoop, right, into late October, November, something, where we're getting, at the very least, a higher low, and then hopefully a higher high on the back of that. So we're not there yet. MACD is an oscillator. Obviously, a lot of people use MACD. I'm not a giant fan of MACD. I think it's a little too noisy. This, I believe, is the weekly. I've got price inside of the indicator here. And looking at even the oscillator of the oscillator, these two lines here, similar to 2020, similar to 2023, we are resetting all of the momentum on MACD. This is default settings, but again, what do we want to see? We want to see a flip of the histogram. We want to see bullish momentum. We just haven't seen that. This is a great little indicator to watch on the weekly. Doesn't move quickly, but is usually fairly correct. Now, it's not going to be exactly at the breakout, but it's going to give you confirmation along with everything else that, yeah, this is the real deal this time. Watch this with volume. Watch this with horizontals and Bollinger Bands. It's all going to effectively give you the same information, but it's another piece of the puzzle that says we need more time. It needs more time. This is Solana. I think also on the weekly, very similar. You can see the breakout here, 2023, and basically says, look, we're not ready yet. We need to cool off even still a little bit more, but we're getting to the point where we could start to see a flip of MACD. One thing I've noticed with MACD, especially in the high time frames, it usually takes a very long time. And these have to go basically flat before the breakout starts to happen. So rough estimation, 2 to 3 weeks even on the weekly weekly MACD before something exciting happens. Last one I have here, RSI. I thought this was interesting just because I know everyone uses RSI as well. This is Solana again. And one thing you'll notice on the breakout in 2023 is we immediately shot to 70 on the RSI and then kept going. So what do we want? We want overbought conditions. We want momentum and directionality. And at 50 on the RSI, that's nothing, right? That's exactly in the middle of the road. And if we look at BTC, same story, currently at 50, middle of the road, doing a bunch of nothing. What happened in 2023 immediately went to 70. Very similar happened post ETF, immediately went to 70. So as choppy as prices looked, RSI has been fairly consistent here in saying, hey, there's no real momentum yet, despite the label of overbought or oversold. You want strong momentum if you're bullish. You don't want chop nothingness, right? So collectively, the easiest thing to use is obviously the horizontal line. Don't forget, if you can dodge a wrench, you can trade a range. And collectively, Bollinger Bands, MACD, RSI, volume is going to help you to be sure, because there's going to be a lot of disbelief in one direction or the other here, guaranteed, if we break up or break down, just because we've been doing nothing for so long. And that disbelief tends to fuel continuation. So for instance, if people are longing the bottom of the range and it goes further, that usually helps ignite the move lower, and vice versa, obviously. If people are shorting the top and we blow through that, then that fuels the move higher. But so far, the longs are winning at the bottom of the range and the shorts are winning at the top of the range. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.